Hey traders, welcome back to my channel. Today's video, I'm looking at the US dollar yen. Specifically just going to look at like my analysis for the pair. I've been trading the US dollar yen a lot lately. And we'll talk a little bit about why. But anyway, we're just going to do an analysis. I'm going to give you some tips on trading the US dollar yen. Nothing super formal, should be kind of short and fun videos. So getting right into it, I'm going to zoom out to the larger time frames, which is what you guys know I like to do when analyzing any pair. Now, I do trade the US dollar yen zone to zone. I trade every pair zone to zone. You guys probably know that. So something we can note when we're looking at the US dollar yen, now this is the 50 EMA. I'm going to remove that just so that we don't get confused. I'm going to remove kind of anything. I should have done this before. I apologize. Anything not pertinent to this video. So this zone here, it's a higher time frame zone. I believe I actually drew it in on the weekly, so that's kind of good. That's why it's a different color. My blue zones would be my daily zones, okay? Or my 4-hour zones. I always keep them a different color, and I'll tell you as we go through. Now, I think that should be the only two that we see, two colors we see here. Something to note about the US dollar yen, so I just want you guys to take a look at the chart here. So it does respect zones. We can see that. Like we can see that here. We can see that here. Like it's well respected. However, this is not uncommon. You see how that super long wick, it did go down to a lower zone, but I mean, you wouldn't have been able to catch much off of this because it happened so quickly. Depending on the time frame you're trading, of course, if you're a scalper, you're probably rolling your eyes at me. But what I'm trying to say is that when you trade the US dollar yen, there's a lot of what we call manipulation. There's a lot of slippage that occurs around certain key levels. And so if you're someone who enjoys trading with a really tight stop loss, it's not a great pair for you. And those of you who've been in the trading game a long time, you know what I'm talking about. You know that it's not a great pair if you have a really tight stop. So I've spoke about using the ATR before. So let's just talk about really quickly setting your stops. So let's say, you were looking at this reversal area here. We had rejection, we have rejection, we have rejection. Price retested again here. If you had a super tight stop, you're going to get prematurely stopped out of this. Now, in this case, that's kind of, that's fine because we're probably not going to have a stop loss this low anyway. But on the day today, if we go to the even lower time frames, which I will do, let's go down to like the 4-hour for a second. I'll show you kind of what I'm talking about a little bit more closely. So even down on the lower time frame. So remember, my blue zones are my 4-hour zones. Okay, I'm going to really zoom up here. We do get quite a bit of slippage, okay? So look, and I want you to take note of, so here, I mean, you could argue that I placed the zone a little bit off. That's, that's fine. But let's look at like this area here, okay? And this is more notable. So this is where you would get in trouble if you're placing your stop loss really, really tight, all right? So we can look at this area and we can also look at this area here. So what you're going to want to do and what I recommend doing is use the ATR to set your stop loss. I have a full video on this, and I'm going to link it in the comments below. I'm not going to go. I find when I get into the ATR in the middle of a video, it makes the video super long because there's so much to kind of explain. So I promise I'm going to link it below. But really quick, I am going to plot it just so you can see how to find it. And basically what the average true range does, so it's ATR, look up average true range or ATR and plot it. Essentially what this does, it gives you a graph, right? And when you hover over any specific area, so let's say we're at this area here, okay? And you hover your mouse over the bottom, let me hold it still, over the bottom kind of graph we have, right? And you can see that it says 0.0 or 0.214. And I'll show you what I mean by that. I want to be very, very clear here. Okay, no, it exited as soon as I did that. So if you look to the right, it says 0.0214, right? To the far right of my screen. I know it looks really tiny, but that's what it says. That's your average true range. And what that's telling us is that on the 4-hour chart, on average, that's how far we're moving in pips. Okay, on average. Now that's, really powerful to have. That's really powerful information to have, because it's over a 14 candle range, and it's giving us really good, accurate data about how the market is moving and how far each candle is, ranging. So in to the short, like to keep it really short and sweet, that's essentially what it's going to do. It's going to give you a much more accurate stop loss placement based on how your candles are actually moving, right? Because it's taking an average, again, of the range of each candle. All right. Now I'm really condensing it. There's a lot more to it in terms of like how they calculate it and stuff. I'm not getting into any of that. You don't need to know that. This is what you need to know. So when we go in and actually plot our stop loss, okay, on the US dollar yen. My God, I can't speak today again. I think I did this in my last video too. When we go to place our stop loss, okay, so we can see that this candle here moved 60.8 points, okay? So this is another thing. When you're looking at this on our chart, because it does say 0.214, you're going to move the decimal over, okay? So it's actually going to be 21.5. And we know that because if you take any of these candles, right, and look at and just literally take the date, price, and range tool. That's what I'm using, the date and price range tool. And you start at the top of the candle and go all the way to the bottom, it's telling you it's moved 24.8 points, right? So then we know, obviously, that's how far we need to move our decimal is 2 over, because it's not going to be 216 if we've got a candle moving 24.8. Does that make sense? You just got to kind of think of it logically. The reason I tell you to do that is it's different for every pair. So if you go to the Euro USD, for instance, you might only have to move it. I don't remember offhand, but let's say you have to move it you have to move the decimal point 3 places over. I'm going to draw this out so I'm not confusing you guys. Okay. So our ATR value is saying this, okay, and 214. This is what the ATR value is saying. When we place our mouse over the little graph, it's saying 0.214. What I mean by moving our decimal, just in case some of you don't remember it from math class or whatever, it means we're literally taking it and putting it here. Now so it's 21.4. That's our ATR value, okay, in pips or points, depending on the pair. If you were to look at gold, it might have to move over 3. So that's why I'm telling you, just think of it logically. This is the easiest way. Take your date and price range tool, take it from the top and the bottom of a recent candle and look at how close it is to your value. Obviously, you're not going to move it over the decimal over 3 and have your ATR is 214 if we're not moving that far, right? It's just using logic. And again, I only say that because every pair is different, which is really annoying, especially when we get into trading like indices and yen pairs and, so I just try to make it really simplified for you guys. And this is why I don't talk about our ATR too much, because I have to really go in depth to explain it. So getting back to trading the yen and placing your stop loss here. So our stop loss should be at least 2 times your ATR. So what we would do is say, okay, let's go to our entry point. Now I'm going to delete this and start over so you can actually see what I'm doing. And I'm going to zoom in because I want you guys to see this. Let's say we see rejection here, right? And we want to enter a buy at this zone, okay? Because we've had rejection. And you want to enter a buy. Now, if you were to wait for confirmation on the 4-hour time frame, you would not have entered until up here anyway, so you wouldn't have gotten stopped out by this wick. However, if you're someone who, day trades and you're not waiting for the 4-hour candles, you might have already had your confirmation on, let's say, the 5 or 15 minute, and that's where this tip that I'm giving you now is going to really come into play. So you're going to take your date and price range tool. Let's say your entry was right here. Now we're going to pretend this is the 15-minute chart, of course. Let's say your entry is here. We're going to go 2 times the ATR value, which would be, what did we say it was? I think it was like 20. Let me just go back over so I'm not telling you wrong information. Okay, so 21.6. So we would do 21.6 times 2. And we can make that really easy, guys, and just say 22 times 2, just so that you can round a little bit. And so we're just going to place it at 44, okay? Or as close to it as we can. I'm not going to spend all day wiggling that around. Look at this last number here. That's what we're looking at for those of you who are not familiar with the date and price range tool. We're looking at the last value here, okay? If I zoom in, you're going to see it's 44. So this would be our stop loss, and we would not have gotten stopped out by this slippage here, okay? That's just a little tip for you. Again, right here, we would not have gotten stopped out. If you're just using a wick low to place your stop loss and let's say your wick low on the 15-minute was right here and you placed your stop loss, around this area where I'm hovering, you're going to get stopped out, right? So just that's one of my biggest tips for trading the US dollar yen. You have to be aware that this pair, unfortunately, you do get a little bit of slippage, and that's just how it is. If you want to trade the pair, you need to kind of adapt to the conditions. So that would be a big tip for you. Other than that, it does respect zones really well. And the nice thing about trading the US dollar yen is that you get these really big movements. Look at this yesterday. I mean, this was just beautiful, zone to zone. This was beautiful. You could have entered at the breakout here, rode down to here to this zone. It would have been a perfect target. I actually didn't get in it. I was too busy. I did enter a US dollar yen trade, but it wasn't yesterday. It was Tuesday. I actually entered at the break right here, and it was a really quick trade, so I was in and out. But anyway, so that's that. Use your ATR. I know I did go over it quite a bit, but I'm going to also link it in the comment section. If you guys want to do me a favor, let me know. Like, sometimes I feel like if I go off on a tangent and explain things like that tool, it will make my videos too long. So let me know, like, if you want short and sweet videos, or if you don't mind when I keep talking and make them a bit longer. So I'm going to go into specifically how I mark up the yen now. Okay, so we're going back to the weekly. I know I went off there. So what I'm going to look at right now, something, that's going to really, that I'm really going to use in my analysis is this zone here. So this is a major reversal zone. How do I know this? Well, I know this because it's been rejected multiple times. And actually, quite recently, it's been respected, 3 times. I know we had some slippage here. Guys, this was likely a really volatile news week, okay? When you see something like that, that's same with this one here as well. And if we go over, we can see multiple other times. So it's a really highly respected area. Even though we are quite obviously in a downtrend, like, look, if we zoom out and we look at the US dollar yen right now, we are clearly in a downtrend. If I were to place my 200 EMA, because I don't like trend lines, I like using the 200 EMA to look at my trends, my overall trends. Okay, yep, so it's the 200 EMA. We can see we're quite a bit lower than this. Now, the reason we're above here, prices above here, is that this is the weekly time frame. Okay, if we go down to the daily, this will give us a better look. We can see that, again, I'm trying not to, hold on. I hate how, sorry guys, I know you hate when I zoom out too much. We can see that we've been clearly in a downtrend. Now, there's also been quite a bit of, I want to say since January. Yeah. So since about, we'll say last January, we've been, kind of consolidating on the higher time frames between these two areas, but overall we're still in a downtrend, okay? However, again, this area is very significant, so I'm not selling it, all right? I'm not trying to sell right now, at least until we get a breakout here. So, and I know we can't see the candles very well. I am going to zoom in a second, but what I mean by that is I would need a clear break here, okay? And I would only take it on the 4 hour. I wouldn't try to be scalping out of this reversal area. Why? Because there's so much slippage with this pair, okay? Or even day trading it. I would wait for the 4 hour candle to close. Sorry, once we get out of that area. All right, let me zoom in now. So because I am starting to look for buys, okay, at this area, and I'm not necessarily trying to counter trend. So I wouldn't take, personally, I wouldn't take a long-term buy until we break the 200 EMA. All right, I would not bother with that. I find UJ is much better for day trading, personally. It's very difficult to trade UJ positionally when it's so volatile and is impacted so heavily by news. Okay, so it's difficult to do that. Not impossible, but I just prefer day trading it. Now, you guys know I don't day trade a lot, but I actually have been day trading a little bit lately because I'm testing out a new broker, and I'm going to talk about that in future videos. So because I'm looking for buys here, what we can do now is go down to our 4 hour chart and start looking at entry. So we know we're at a major reversal area. Okay. I've got 2 additional zones drawn in. Okay. So this is our 4 hour zone at this support area at this level of significance. And this is our next area here. So if we were to drag this over, we didn't quite come down to it, but pretty close. This is probably just some error on my part in placing that support zone. If I went back and perfected it, I'm sure we could find an area where it actually does touch. But either way, we're still getting rejection. We're getting a break of this zone here. So it's actually a pretty good time to take a buy, a short-term buy, and we can try riding up to this zone. I would take profits here. I would not try to ride too much past this zone, and simply because we need to look to the left and say, how has price been reacting? And what I can see right off the bat before I even place this in is price has, oops, I gotta change this color. I had this because we were on the weekly. Let's go back to style, make it blue so that we're not getting confused with our zones. And I can see that we've been getting quite a bit of rejection here. So this has been acting as a resistance, and price, when we're looking at UJ, price really likes to bounce between those. So I would not necessarily be trying to ride out too long because we're getting so much rejection and volatility in between these 2 levels, right? We always need to look left and see how price is behaving. But this looks like a pretty good buy here. And what I would say as well, we can come back and look at this and see if it works out. Let's say Monday is probably going to be when I post again, but also you can take partials and try to ride out up here. The reason I don't is because it's just price has been, like, look at right here, okay, for instance. So when we broke out of this level, had you tried to ride to this second zone as a target, we just didn't make it there, right? It did here, but it's just not regularly doing it. Look at right here, same thing. So because our 200 EMA is here, price is kind of respecting that. I just don't think this is a great second target, but I mean, to each their own. If you want to do that, by all means. So those are the 2 areas I'm looking at. Now, the next thing I wanted to touch on really quick is how I confirm entry for, I'm going to remove this pink one now, guys, because I don't want it to get, I like to keep my charts clean. So my actual entry point, we can go down to the 15-minute, because remember, we're day trading. And what I'm looking for, and it's already happened, is a nice strong body candle coming away from our zone. Okay, so you could take any of these candles. I'm really going to zoom in. This is my number 1 confirmation. I want to see nice long bodied candles like this one, okay, coming away from the zone. You could have also entered at any of these guys here. This, I mean, I don't usually enter when I'm seeing price kind of consolidate a little bit like that. But again, right here, what we're seeing now is another area for entry. You don't want to enter too late. It's a bit late right now to enter a trade like this, but that's just essentially what I'm looking for. The next thing I would look for on UJ is momentum. So I'm looking for, if I plot my MACD, this is becoming a longer video than I want. There's two things. I'm going to look at this histogram here. I want to look at how long these bars are, and we can see the bars are starting to get longer. Like if you zoom in, this is a lot longer than the first one. That's telling me, well, we have a nice increase in momentum. The next thing, if you look really close, and it's going to be hard to see here, I'm zoomed in as much as I can, but these two lines, okay, so these two essentially EMAs are widening. The space between them is widening. That's telling me we have a nice strong momentum, and that's what I like to see entering a trade. And let's go back and look at our initial entries. So right here, same thing. So we had our bars were increasing. They're, we have a nice strong momentum all along here, and widening. These two lines are widening as well. So really easy, right? Like it takes 2 seconds, and now I have confirmation. I could have entered here, and we have a great buy. Next thing we will look at is, I want to see if we can see any divergence here. So because we're at a major reversal area, let's just look and see. Now, I don't know if we have divergence here. I'm doing this all live, so obviously I can't make it happen if it's not going to happen, but I don't like using the MACD for divergence either. So we're going to remove that. I'm going to really quick, I promise you I'm almost done, but I do want to show you this because that would be another great, whoops, what should I put? No, I don't want you. I do not want you. Go away. I don't know what I did there, guys. I'm sorry. If we look at the RSI, okay, there we go. I need to favorite that. So we have our RSI plotted, and I'm going to go out to the higher time frames. I like to look at it on the daily. I've said this a million times. I know I'm repeating myself. Remember, we're looking for regular divergence because we do have this major reversal area. And let me just look at this really quickly. Okay, sorry, imperfect. We can actually see regular divergence here, which is awesome. I did not think we would see this. So I do want to just use my pen here. Hopefully you guys can see what I'm talking about. So if we look at price right here, okay, we're making lower lows. Now, it's not a really steep gradient of our line or anything, but we're definitely making lower lows. And if we look at the same point, okay, on our RSI, we're making higher lows. So we do have some regular divergence there. We did see a push up there as well. And if we look to the right, so what we're seeing right now, we do have higher lows here. Let me just see, guys, if I can. I'm going to hover my mouse here, okay? And we don't have, okay, so we don't have divergence here, but this is what I would love to see. So right here at this particular entry, we don't have it. We can see prices making higher lows on the RSI, but we're not making lower lows here. Let me see. No, we're reaching if we look for it there. This is what I would be looking for. So this would have been, a really nice confirmation. You're not always going to get divergence, guys. Definitely not. It's a great confirmation to have, but you're not always going to get it. This is what I would be looking for, though, so you know that for next time. That's it, guys. I think I've gone off on enough tangents for today. Hopefully you took something good from this video. Let me know what your tips are for trading the US dollar yen. These are just mine. I'm interested to see what you have to say. As long as you say it nicely, I will listen. And yeah, I'll see you guys in the next video.